to go over what we've got going on here. So this is a trade that we've just taken, and I entered at the break of the highs. We still had fluctuations at the 1 minute time frame. Price action pushed up. You're looking to anticipate every break of the 1 hour highs at that given time, which unfortunately you didn't get. So, or it wasn't the re-break of the 1 hour highs. Your advantage point is towards the left of the screen, but you want the continuation of a push up. 4 hour to give you the wick fill, and so on. So you can come up to 4240. So if we just go down the breakdown, Asian London, gathering context. This is through this morning. Woke up at around 6 something and basically went through what we had in Asian, and then this is London. So price action started to push up. On our narrative, we've got a very bullish day. That's very clear throughout the Asian and London session, and we've had some structure being printed just before we got into the charts, before we got into the position. This is the copy and price. You want price to have a very clean price action towards that 4243 areas. And then we have some form of rejections at these areas here. If you look directly to the left of the screen, you've had rejection on a lower time frame here. Now, there is management on this position that was very aggressive. When price action opened up here, you're looking for a bottom wick. Once you've got the bottom wick, we trail stops. So instead of having stops set at 202 ticks, it's now set below the lows. And that was around about negative 47 ticks. We just got ticked out of this trade. If you look at price, it's given you no bottom wick. So your current 4 hour has no bottom wick. That probability means it's quite likely price should come back down. Hence why I decided to trail my stops a little bit more aggressively once we had that bottom wick. Could I have let it play out? Probably, but in my previous experience, I think that it's not very fair for me to leave a trade running with risk when you know that there is a higher likelihood of chance starting to reject, giving you breakdown towards the stops. So for me, I think this is a valid stop. However, I think we need to begin looking at adapting again if you want to take advantage of absolutely everything. So if you look at the trade position, you're still creating very bullish structure, especially on the higher time frames too. You've got the hour closing soon. Would it be best just to leave the entire trade to run like this? A 1 to 2 setup, you're looking at 440 ticks TP, 202 ticks loss. I'm risking very little. Now, a lot of things have changed since the last time I've uploaded a video. For context, I've blown my evaluation for the 100k, and that's because I had inactivity, 7 days of inactivity. Being away for so long was great for enjoying life and experiencing new things. However, for my trading, it was actually pretty bad. So we're back in the game. We're back on a big screen. I can start seeing things a little bit more. I've got my own space to focus. It's a very messy here because I need to unpack things and put them all in their respective areas. But when you focus on the trading, first trade back is a loss, unfortunately, minus 47 ticks. Back on my personal account, and right now I'm just trying to ease back in. I haven't taken a trade in such a long time, a proper trade in such a long time. 0.01 lot size, personal account, and I'm not bothering about 1%, 2% risk. I'm just bothering about risk to reward because my lot size is so small that no matter how much I risk, it doesn't really matter. So as long as we're getting risk to reward right, all I care about is getting the right trades. I don't care about the money right now. I care about the trades. And once we can build that foundation back up, we can look at increasing lot size and look at buying, purchasing a new challenge for us to look at futures again. So right now we're back at CFDs. We're no longer trading futures currently. And then we're going to look again to see what we can take advantage of when we look at building the skill set again. So we've stopped out the trade at minus 47. However, the trade outcome looks like if you continue breaking highs, price action to continue pushing forward, which is exactly what you wanted in this case. But what I have been realizing lately by meaning the last quarter of the year, price action has been doing something like this where you continue to drive, therefore meaning we shouldn't manage as aggressively and give price as much room as possible to drive. So we will see with the observations at the end of the trading session to see where this trade outcome has gone. But coming up to 3 p.m, let's see if there's any more opportunity that we can take advantage of on this next current hour open. We'll take a screenshot of this and evaluate this later on in the trading day. We are back. It's the morning after. We've just got basically the full outcome of the trade that we expected yesterday. Now, to get straight to the point, the reason I'm making this is because I want to note down mistakes that I've made. Sure, On the open of the 30 at 2:30 NY Open, the bell, price action came down, created you a small bottom wick for then price action to start pushing up. So I'm looking to manage risk by decreasing my risk size. And solely the purpose of me doing that to trail my stops a bit more aggressively is because your current hour and your current 4-hour candle had no bottom wick. So your likely chance of price action breaking those lows is quite high for price action to continue down towards your full stop loss at 202 ticks. Now, I think I should stop doing this, and when I say I think, I mean I should. We shouldn't trail so aggressively because the whole morale is to give your trade as much of a chance as possible, as much space as possible to actually run. And if I had done that, this would have been a very nice trade. It's a 1 to 2 trade, 1 to 2.18, and price action would have come up towards your full take profit at 440 ticks. So for me, coming back into the trading industry after a short break, I'm kind of expecting there to be a little bit of tweaking here and there. This is something that I'm pretty sure I have talked about in the past, but then I have forgotten. So when we're getting back into the groove of things, understanding, creating as much space as possible, 4+1 checklist, we just go from there. We've had 2 incredible opportunities yesterday. So I had this one, and then in the morning we had a London push that I didn't get into because Asian Session already had printed it. It would have been fantastic to have, I think, almost 900 ticks on the day. So for me, the sole focus now is trying to understand market consensus, which, as we can see today, might be that you've closed above that range. We need to break down price again for price action to potentially come back down, retrace in the range. However, price action also has a very bullish momentum to continue breaking the highs and push up, so we can utilize this to our advantage. But recapping from the session, this would have been a fantastic trade had I left enough room for price action to push. So there's indications that price action will tell you you're continuing to push without needing a bottom wick. This is a fake out. Price action is going to continue coming up. You shouldn't retrace to the bottom here. You should just keep the stops the same. And same thing on the hour. The hour already gave you inverse hammer, no bottom wick. Price action should continue pushing up. So it's trying to eliminate the excuse to manage too aggressively. If you manage too aggressively, price action will do something like this, where it will tick you out for price action to continue creating bullish structure. And that is not something that you want to get into. That is not something that you want to make as your downfall. Managing too aggressively can also mean losing a trade, which is exactly what happened yesterday. So just give the trade as much room as possible. That is it. That is all. And we're going to move on to Thursday's trading session, and we'll see what we can grab on the day for London and New York.